$5.3 million on this Pikachu card.
Because Pokemon has outperformed the stock market by 3,000% in the last 20 years.
Meaning this is now worth more than all of these watches, these cars,
And probably this dinosaur.
because it is the only perfect PSA 10 Pikachu illustrator in existence.
And now, I'm letting it go.
This grail is going up for auction on Pokemon's 30th anniversary. The crown jewel of the highest grossing franchise in the world.
Someone is going to own the Guinness World Record-setting card that I hunted for years. And
That I wore out to my WrestleMania debut. It is the very best. And that is why I spent $5.3 million.
Well. He said, I hate this guy. Yeah, you're not alone, man. You're not alone. But to think, you just bought a Pokemon card back in the day. You could have retired today. Well, that. Guys, sitting right now at $1.7 million. Look at this. $1.7 million with 40 days left. Oh, my God. There are some bets you can put on this for how much that card is going to sell for. I think a lot of people are expecting somewhere in that $6.5 million range. Insane. Absolutely insane. Oh, well, how about that? It's okay. There's other opportunities out there. We're going to cover some of those today. He said generational wealth. Yeah, man. Pretty nuts, I must say. Man, we're going to cover some stuff today. We're going to, obviously on the macro side, there's plenty to cover. This is my first solo live stream of the year. I actually hit about 100 in, I think I hit 108 last year. Pretty insane. And did a live stream with Tyler from Unleashing Deep on Sunday. We're going to be doing those once a month. Really excited about that. We covered a lot of our thoughts on the helium situation. We'll touch on that a little bit on the show today, but I don't want to beat a dead horse. There's been a lot of conversation around that. We'll spend a little bit of time, though. We'll talk about other deep end projects as well, obviously. Thank you, sir. Appreciate it. Appreciate it. If you could, like and share if you're watching, guys. And we're going to talk about what's going on with the Venezuela situation. Not going to talk about my thoughts on whether it's right or wrong. We're going to talk about how the market could react. Okay, that's the whole point of this show, is not to get political. Talk about the markets. And we'll talk about what could happen with inflation, some of the things we're seeing with gold, silver, how that could impact Bitcoin, some potential threats, and a big threat that was just removed within the last 2 hours from the markets is something I was going to end up covering anyway today. But we had a development there 1 or 2 hours ago, somewhere in that range. So probably a reason why Bitcoin is starting to move back up in the right direction. Will be really fun to watch the New York Open tomorrow and how the markets react there for sure. But how about starting out with the Venezuela situation? Now, there's a lot of talk about whether it's legal, okay, whether or not it's a good thing or a bad thing, or whether we're there for oil. I would have to think that, well, I don't know that we've been involved in really any wars of any sort over the last 25 years that didn't involve oil for, in some way, shape, or form. Not just oil, though. We're going to talk about the gold reserves there. So that is one factor in all of this that not a lot of people are talking about. Venezuela is among countries in Latin America with the largest gold potential. Could potentially rank it highly globally if estimates prove to be accurate. Much of this is largely untapped due to political instability. Obviously, we've seen that for the better part of 26 years there. Sanctions, lack of investment, environmental challenges, etc. So I imagine that could be some part of what's going on there. But the big topic, of course, is the oil. It's really interesting. There are downward risks, okay, I'll say, like opening up the door for other countries to do something similar. I bring that up because geopolitical tensions are bad for markets. Uncertainty is bad for markets. And generally, when you see something like this, oil prices go up because there's concern over disruption to oil supply. We've seen oil prices actually come down here, and I want to talk about why that is. You'll notice on this list, the U.S. is the largest oil producer in the world. We've been for some time now. This actually happened under Biden. A lot of people probably aren't aware of that. But Saudi Arabia is up there. Russia is obviously up there. We'll talk more about Russia in a minute here. You go down the list, Canada, big exporter. big oil producer. Down the list is Venezuela, number 12 on the list. And it's a little bit curious because if you actually look at the oil reserves, Venezuela has the largest oil reserves in the world. Well, we put a lot of sanctions on them, and they didn't have the investment to really get to that oil. And that is the big change here. And that's why, generally speaking, when you'd see something like this happen, oil prices would normally spike. If you see geopolitical tensions in the Mideast, for example, it's been quite different here. And I think that's because the markets realize there's a lot of untapped oil here that's going to be tapped into. Now, is it an overreaction short term? I think it could be, because it's going to take 12 to 18 months realistically to start getting to that oil. It's not going to happen overnight. I wouldn't be surprised if we start to see oil prices tick back up slightly from the reaction we originally saw here, but it does have major ramifications on what could happen with markets. And the first is with Russia. So Russia's economy is very, very reliant on oil exports. This could have a major impact on the Russia-Ukraine war, actually. So it says that oil and gas revenues contribute to nearly 1/3 of Russia's federal budget inflows, making the sector a critical pillar, despite efforts to diversify amid Western sanctions and shifting global demand. So we put a lot of sanctions on Russia. China doesn't really care. They continue to buy oil from Russia. But in 2025, Russia's oil export revenues have fluctuated but trended downward, reaching a low of $11 billion in November, the lowest since the full-scale invasion of Ukraine began, due to lower prices. And that's the key part. Like, prices have been driven down. That really has a negative impact on Russia, pushes down the amount of money they can bring in. In particular, we've been putting a lot of pressure on India to stop buying from Russia. And of course, a lot of this is, if they can't make as much money on oil, it really hinders their ability to fund their war efforts. It says China's role as the dominant buyer has grown, accounting for 47% of Russia's crude oil exports. And of course, China has kind of ignored the sanctions that we're putting on there. But this is the big part right here. Serious pressure emerges if their oil falls below $50 to $60 per barrel, as this could slash oil and gas revenues by 20 to 30% or more compared to budgeted levels. It says that could slow GDP growth by 1% or more annually and force increased borrowing, tax hikes, or spending cuts amid high military expenditures. So that's really the key level there. If we can get oil down around that mark, and that is exactly what we're seeing with the type of oil they have, in particular, this type of crude oil. We're sitting at just over $51. So we're getting to a point where Russia's starting to feel a lot of pressure. And I will say Russia and China were posturing for oil, in Venezuela. This is a big hit for Russia. It could have obviously impacts with China as well. Okay. But that is a massive blow to them. The other is Canada, actually. You saw on that list, Canada's number 5 in exports. Interestingly, says over 90% of their oil exports go to the U.S. So it says Venezuela's oil is also heavy crude, so it's directly competing with the types of oil grades that Canada has. So again, it says while short-term effects are limited, and I think that's one thing people need to realize, and things have been a little bit overblown here, is everyone expects this instant, immediate impact here. It says here that, Venezuela's infrastructure may take 18 months to years to ramp up production significantly. So analysts do warn of potential downsides. So again, markets have reacted, and a lot of times they start pricing things in ahead of time. But it is going to be some time before we start to see any major oil production or any ramp up there. In fact, in the short term, we could see some disruption, frankly. That could be a negative for oil prices. But obviously, major implications there for both Canada and Russia and all of this. The other thing, though, is inflation. And obviously, there's a very strong correlation between oil prices and inflation. Makes sense. Oil is used for a lot of manufacturing. It's used for a lot of transit. That does flow through into prices, right? So if we can see inflation numbers come down, well, that's a very good thing for the Fed cutting rates. We are starting to already see this in Truflation. Of course, this is not the metric that the government uses. Truflation uses a lot more real-time metrics CPI, what the government uses, a lot of survey data, a lot of lagging data. So we tend to see trueflation hit first, and then we see that start to trickle over to CPI a little bit later. A couple of things working here. Obviously, oil prices have been pushed down significantly this year, the lowest they've been in years. Additionally, we're starting to see rent prices come down. There's a couple of reasons for that. There were areas where overbuilding took place, in particular in Austin, Texas, a great example of that. There are some cities where rent prices have still gone up slightly, but net average across the country is down. Scott Bessent was talking about how actually the deportations we're seeing has decreased demand for rent. So we are starting to see rent prices come down because of that as well. So that is about a third of the calculation for CPI. So that is another driving force to push inflation numbers down. And of course, this all has a direct impact on whether the Fed can cut rates. The Fed has a dual mandate. Number one is to keep inflation in check. Obviously, if they lower rates too quickly, you run the risk of inflation coming back. So they want to make sure inflation numbers are looking good before they would cut rates further. The other is the job market. I'll cover that more later this week because there have been some troubling signals from the job market. Obviously, that also bodes well for rate cuts. If the job market's struggling, they would want to cut rates to stimulate job growth. Okay, so if we have this situation where the job market's not looking fantastic, we have inflation coming down, that certainly is the perfect recipe for rate cuts. Now, what do we look at, moving forward? Jerome Powell has 3 more FOMC meetings until his term is up. If you look at the likelihood of rate cuts, as of right now, there's a 25 basis point cut at 11%, 1% for 50. Very likely that we see no change in the upcoming January session. That's what the market's baking in, at least 90%. I would say that's likely true. Okay. If we see a rate cut here, that would mean that there's about 90% upside that's not baked into the markets today. There's currently about 10% downside risk if they do indeed go forward with not changing rates. And that's the overwhelming expectation right now. And that's what I would expect. Looking at the other 2 that he has under his umbrella before his term is up in May, of course, there's a much higher likelihood that we see a rate cut looking a little further out into March. Okay, so right now, market's baking in about 39% chance there. And again, in April, so there's the next 3 FOMC meetings where they could announce rate cuts, 36% for a 25 basis point cut, looking a little further out into April. Now, these things will change probably quite a bit as we get close to those meetings. And of course, we don't have full data. After the government shutdown, there's still a lot of reports. I mean, we're starting to get full data trickling in, but a lot of what the Fed's been doing, they've kind of been going blind to this point. So those are the next 3 under Jerome Powell. Now, what comes after that? Okay, this is really the big story, in my opinion. Who's the next Fed chair going to be? And right now, Kevin Hassett is the number 1 candidate, most likely. I've covered Hassett, Warsh, and Waller. I haven't covered Rick. I'm going to look into Rick a little bit, and I'll explain why. But Kevin Hassett, obviously the leader right now, I don't think it's going to end up being him. I think it'll be best for our bags if it is, because he would aggressively cut rates. He'd likely increase the Fed balance sheet through quantitative easing and really pump markets. But there's been pushback from people close in the White House. Okay, so I don't know that this is going to be who it ends up being. Same with Warsh. He's kind of the opposite end of the spectrum. I don't think that he's going to aggressively cut rates, which is what Trump has voiced he wants. He's also not going to be as aggressive in pumping markets. So I just don't think Warsh aligns with what Trump wants. I think he threw him in there because he wanted to make it seem as though there's a bigger pool of candidates. I actually think Waller right now, the dark horse candidate, is most likely. And I am planning on putting a no bet on the both Kevins, possibly yes, bet on Waller. Now, I recently read a book talking about how in Trump's first presidency, he appointed Jerome Powell, actually, which is crazy when you think about how much he talks shit on him constantly. Jerome Powell was a dark horse candidate. He was not anywhere near the top as far as being a favorite for the position. He was a Fed member at the time. And I think Waller kind of fits that category if you look at how Trump handled this the first time around. So I think Waller's a definite potential choice here. Rick Ryder, I need to look him up and better understand what his stances are. But I just don't think it's going to be one of these two, given what we've seen in the past. But we'll see. The big thing is we don't want Warsh. Hassett or Waller would certainly be more likely to cut rates. And if we look at the FOMC meeting schedule, again, these first 3 of the year are under Powell. We then have another 5 meetings after that in the second half of next year where the new Fed chair will be leading the way. That is where we could see aggressive rate cuts. When you look at someone like Hassett, he's out here talking about a full basis point, or sorry, a full point, not full basis point. That would be 1% for 25 basis point cuts. That's wild. Okay. I think that Waller we'd see something similar there. Warsh definitely not. But just to put that into perspective, how many cuts we could see next year. And when you look at the betting odds, and there has to be some outlier bets here, because I think most are expecting at least one more cut under Powell in the first 3 sessions of the year. We still have 5 more under the next Fed candidate. And they're going to be getting pressure from Trump. Trump's going to put someone in there that's going to be likely to cut rates. So like this 2 rate cuts to me seems like, I feel like it has to be more than that, right? So you could potentially put some money on the no here. 3, 4, I don't know about 5, but I feel like comfortably we will see 3 or more next year, or throughout this year. Sorry, it's 2026. And the market is not baking that in at all right now, obviously. So there's a lot of upside there if we see additional rate cuts. That's all good things. The other side of the equation, of course, is not just rate cuts. It's what does the Fed balance sheet look like? Are we seeing quantitative easing? And we are actually. So if you look, you got to zoom in a little bit. It's kind of hard to see right now, but it is important. It is important to call this out. For the first time, really, since back in March of 2023, and you remember what happened here. This was when the Silicon Valley Bank debacle happened. We had the regional bank crisis that forced us to pump liquidity into markets. Ever since then, it's been down, down, down. And of course, this is the Fed balance sheet. So they've been letting treasuries run off the balance sheet, effectively pulling liquidity out of the market. What we're seeing now is the first tick up really in the better part of almost 2 years. That's fantastic news for risk on assets. It means that they're buying treasuries, right? When they're buying treasuries, that means they're pushing liquidity into markets, and in a lot of cases through our banking system. But that ends up getting loaned out. That ends up putting more liquidity out there. That means people are more likely to be investing in risk on assets. So that's good. So not a huge tick up yet, but one nonetheless. So you love to see it. The other things to look at as far as risk on assets go, Russell 2000, seeing all-time highs here. This is great news for alts, guys. We have seen stock markets hit all-time highs. We've been seeing precious metal hit all-time highs. We'll talk more about that in a minute. But the Russell 2000 in particular is smaller caps. Okay, so smaller cap companies, they have a very strong correlation, this chart does, with Ethereum and other altcoins. It's a serious indicator that we are seeing risk appetite come back. The fact that this is hitting all-time highs, that is fantastic news for alts, guys. So risk appetite coming back is a good sign. The other thing is copper. So pay close attention here. I covered throughout last year a lot gold, especially early in the year, and silver. Both those did really, really well. Copper is up here hitting all-time highs as well. Okay, this is good as opposed to gold, which is really a store of value. It's where people go. It's a safe haven to hedge against inflation, but as it is a risk off. Okay, a risk off asset. Copper is used for manufacturing. Okay, copper is used for electric vehicles for one, but building out electrical infrastructure. Okay, it's a measure of the economy expanding. So this is a good thing, seeing this up. That would mean that we're looking at potential growth. in particular, the copper to gold ratio is something to really keep an eye on. So it makes sense, right? In a time where we're not seeing growth in the economy, we're seeing people risk off. They would want to buy gold. That would push the gold price up. The demand for copper would be dropping, right? Because you're not seeing expansion in the economy. And as such, you would see this type of move downward. That would mean that you'd see this type of move, yes, downward. The value of copper in relation to gold is dropping. So the copper would be on the numerator there. So if that value is dropping, gold's going up, you'd see this chart moving downward. That's a measure of risk off. That means the economy is not expanding. When you start to see things move in the opposite direction, and it's not huge yet, but we're starting to see it tick up, that's good news. Okay, that means that copper is actually increasing more than gold's increasing. Okay, we want to continue seeing this trend. Okay, this is not a breakout by any means, but this is something to keep a very close eye on. I'm actually looking to add some copper and reposition. So I bought a lot of silver in a 2x silver fund earlier last year that did freaking crazy well, still doing really well. But I want to get some exposure to copper, given what we're seeing with risk appetite coming back. We're seeing quantitative easing start. We're seeing rates come down. Those are all good signs for a economy that's going to be stimulated. We want to see hiring come back. We want to see manufacturing start to tick up. That's one thing we haven't seen yet. And this is the ISM has the PMI index, so the manufacturing index. So this is actually like survey data, but the thing you need to know here is below 50, we're basically contracting. When you get above 50, it means that we're in expansion mode for the economy. It's been quite a while since we've been in a major expansion. You hear Raul Paulo talk about this quite a bit. This is actually probably the chart you're used to seeing. It goes on X a lot. So the ISM is, again, it's been hovering down here around 50. The whole thing, what everyone's looking for right now is for this to break above 50. So we are expansionary period. It has had very strong correlation with risk on assets and Bitcoin and crypto in general. As we expand, the price tends to go up. And that's one of the big reasons why people are saying that the 4-year market cycle is broken. They're saying, hey, we normally have a 4-year cycle or 4-year business cycle. We're not seeing this type around. We're seeing this stagnation under where we have not been expanding. Now that QE is starting up, now that rates are coming down, the expectation is that this will break back above 50. And that means that risk on assets will also follow suit, right? Copper would be another one that follows. So again, if that thesis is correct, if we see expansion come back in the economy, copper should do well, crypto should do well, and risk on assets in general should do really well. So those are the things to be keeping an eye on, guys. Copper to gold ratio. I'd say look at the Russell 2000 and look at that expansion. Okay, look at that survey data there on the ISM data. Okay, let's talk about a couple of threats. And there's always unforeseen threats, guys. These aren't all of them, but I want to talk about a couple of things that we need to keep on our radar. Number one is on Friday, we're going to find out if the Supreme Court rules against Trump's tariffs. This is important, for sure. Right now, you're seeing that this is ruling in favor. So in other words, there's right now a 78% chance being baked in that the Supreme Court is going to say Trump's tariffs are illegal. They're going to rule against his tariffs. Okay, that's a very high chance. What does that mean? I have a couple of videos that I posted on X about this in the past after covering it, but I think there's a high likelihood that this is how this thing plays out based on some of the news I've been reading. I asked, if the Supreme Court rules against Trump's tariffs, could they still deem that it would be too difficult to undo them? Because one of the things that's floating around is that they're going to have to reimburse all the tariff money to all these companies. There's a scenario here where they do rule against it, but they do also conclude that applying a ruling prospectively only, meaning that there would not be retroactive relief, okay, because it'd be too disruptive. So they could say, hey, your tariffs are illegal moving forward, but we're not going to force you to repay all that money because it'd be way too disruptive. It'd be too difficult to do so. In fact, during oral arguments, and this is why I brought this up and asked, because this is something I was reading about, Justice Barrett specifically raised this and said that there's a chance that if it is ruled against, these tariffs are ruled against, it would still be too disruptive to have to refund everyone all the money. And also the Council for Challengers also suggested that this is potentially a way to address the complexity of this situation. Now, how does this play out? I mean, look, I think if the tariffs are ruled against, it's not a bad thing for, actually probably be a good thing for risk on assets. But where I think this could backfire is there are other routes that Trump could fight this decision with. There's other laws, other statutes they could use and to try to reinforce these tariffs. That could lead to uncertainty. Uncertainty is really bad for markets. So this could get a little messy. We'll see what happens on Friday. But this is a decision that's coming out and down in just 3 days. It has to be on your radar. You got to be paying attention. Certainly a risk to markets. The other thing is, I know it was not long ago we had the government shutdown, but guys, we are coming up quickly on a potential second shutdown here. They need to get things figured out by the end of the month, essentially. So we could have a partial shutdown starting as soon as February 1st. It says that recent reports indicate bipartisan negotiations are ongoing with progress on some bills, but they have about 4 weeks from now to resolve this. And many observers expect a short-term extension or partial deals to avoid disruption. Let's certainly hope so. Obviously, we saw the longest shutdown in history not too long ago. It didn't necessarily have an immediate negative impact on markets, but what it did and why it started to have an impact on liquidity in markets is this right here. This is the general account for the Treasury. This is essentially, you can look at it as their checking account. You saw this during the government shutdown. It started building up a ton because they couldn't spend funds. This built all the way up to almost $958 billion. And that was during the government shutdown. Obviously, since the government's reopened, they've been able to spend some of that money. But that's something to certainly keep an eye on. If that starts building up again, we could see liquidity crunches in markets that would potentially have a negative impact on markets. So let's hope that we don't see another government shutdown. Okay, that would kind of suck. The other thing, market structure bill, because it could delay the market structure bill. This is a midterm year. People need to realize. I'm seeing a lot of posts about, oh, they're going to be voting on January 15th on the market structure bill. That's not entirely true. I believe they're voting on the markups for the bill. So they're still kind of ironing out the details of the bill before it would go up for an official vote. Now, once it's passed, assuming it does get passed, I think it'll go to Trump's desk. He'll sign off on it like immediately. But I think it's important to realize like this is a threat that this could move later into the year. With it being a midterm year, especially, we were hoping to get this done last year. Obviously, it didn't happen. Part of that was the government shutdown. But if you look at the likelihood here, you know, all these people keep posting like, oh, this thing is going to get passed in January, blah, blah, blah. Y'all, there's only a 25% chance this happens before April. In fact, only a 49% chance before May. So it's more likely this thing gets pushed out past May than it getting passed. And really 79% before next year. So I'm not as optimistic as a lot of people. I hope it happens because to me, this bill is going to be instrumental in alts and deep end projects in particular, getting investment and getting funding. I think we can still see them move this year for sure with risk appetite coming back. But if we want to see TradFi and we want to see a lot of new money enter the space, for deep end, I think it's critical this bill gets passed. So let's hope. Let's hope that happens. But I think we need to be realistic. And when you see these accounts posting that stuff, you got to dig a little bit further sometimes. This was the news that broke, though, about 2 hours ago. So as I was preparing for the show, this was sitting at a 77% chance of MicroStrategy getting delisted. This is another one I've covered before. I put some videos out going through all the details on this, on what the implications would be. But talk about the prediction markets being wrong, which doesn't generally happen. They're pretty accurate, but 77% chance was baked in for MicroStrategy to get delisted from the MSCI. This also would have opened the door for other digital asset treasury companies to be delisted as well. I think we've seen MicroStrategy stock pump a little bit after hours following this news, but man, talk about a shift. But this is a good example right here. You know, if 77% chance was being baked in, this is a positive outcome. So markets weren't expecting it. And that's why we're seeing a bit of a move back up in the price of Bitcoin. You can see that the time of this being announced and the price of Bitcoin reacting accordingly. That's why I think tomorrow morning, New York Open is going to be really fun to watch what happens, because the market got this one wrong. So these are the things to look for is, a lot of times, poly market, prediction markets are accurate. So if it's already baked in, you're not going to see a huge reaction. That's like after everyone was talking about the Japan reverse carry trade, everything's going to crash, blah, blah, blah. The market's new for a month. That had already been baked in. This, on the other hand, was not. So let's see what happens tomorrow. I wouldn't be surprised if we see some positive price action for Bitcoin. That'd be great. Speaking of Bitcoin, and I want to talk about a little bit about 2026 and I think what we could see here. Guys, we're seeing all-time highs in the stock market to the extent that now the risk premium is actually negative. In other words, when you look at the risk reward on owning equities, the stock market's so high right now, the potential returns no longer outweigh the risk. That generally mean that the stock market could potentially be a little bit overvalued. The other thing we've seen is that gold and silver and precious metals have just gone absolutely parabolic. I bring this chart up to put this into perspective. Gold is now a $30 trillion asset. Silver is sitting at $4 trillion. So where's this money going to go? I mean, yeah, they can keep going up, I suppose. But at a certain point, smart money likes to position, and they're going to try to get ahead of everyone else. If we start to see a rotation, and there's a historical precedent here, by the way, I'm going to talk about in a minute, but if we see a rotation out of precious metals, you see the risk rewards not really there right now for equities, for the stock market. I mean, crypto is a very obvious choice right now. It's been incredibly oversold. It's the only asset price that didn't do well last year. Really, October 10th was a big reason for that. But I mean, we're pretty far off as a total market cap. We were at $4.28 trillion. I mean, that's a huge drop off down to $3.18 trillion. So I would have to think that some of that money is going to flow over to crypto, just because compared to everything else right now, it's quite undervalued. The price has been suppressed. I don't know where else you'd really feel comfortable or confident rotating money right now. And again, the total market cap of crypto at 3.18 trillion. That's the total market cap of all of crypto. Gold's at $30 trillion. 3 trillion versus 30 trillion. Even silver, substantially higher than the entire market cap of crypto. So I say that because it wouldn't take a whole lot of rotation from those other assets into crypto to see some meaningful price appreciation. Same with some of these companies, guys. Like you look at NVIDIA sitting at 4. I mean, look at all these figures right here. I mean, Bitcoin's way down the list now at 1.8 trillion. All of these, you could argue, they're all near all-time highs. A little bit of a rotation out of those into crypto, into Bitcoin, could make a massive move in those assets. And it's not unprecedented. We have a historical precedent here. Gold peaks before Bitcoin. Okay, so there's an analyst, Bull Theory, that put this out there, how gold and silver typically reach highs before Bitcoin follows in a pattern that mirrors the 2020 market cycle. So it says when precious metals peaked in August of 2020, capital shifted towards risk assets. Bitcoin surged from 12,000 to 64,800, representing a 5.5x. It says the total cryptocurrency market capitalization increased 8-fold during that time. So obviously alts saw a lot of benefit as well. So that's a big deal. Gold has reached record levels near 45.50. Silver has climbed to 80. We just looked at that. Bitcoin's been trading sideways, similar to what we saw in 2020. It also says that the liquidation event we saw on October 10th could be looked at similarly to what we saw with the COVID crash in March of 2020. So there are a lot of similarities here. There's a lot of reasons to think we could see money flowing into crypto and Bitcoin. Says that last cycle Bitcoin rallied mainly because of liquidity. This time, liquidity plus structure is coming together. Absolutely true. Gold and silver moving first is not bearish for crypto. And talks a little bit here about the Bitcoin to gold ratio. So I wanted to pull that up actually, and I thought this was quite interesting. So there's this key level. We saw us break it above. This is a multi-year support level here. This is a Bitcoin to gold ratio. When we broke above this, it turned into a major breakout. Again, we tested, retested, broke below, and we saw this major downtrend. Saw the same thing here, broke that same level, and it turned into a breakout. We just bounced off of that level. So this is something I'm certainly keeping an eye on, the Bitcoin to gold ratio. If we can stay above this level and really keep that as support, I think we could see this thing break out. So yet another data point as to why we could see some very favorable price action in the near term. Let's hope so. Another thing I want to call out with the Venezuela situation is there's some rumors that they actually have a lot of Bitcoin reserves that could be added to the strategic U.S. reserve, or at least, the very least, put into safe custody where it wouldn't be sold. So I want to play this video for you.
Of this is the fact that there are multiple reports that the government itself has been looking to evade sanctions by doing sales of oil in Tether, which they then move into Bitcoin. And so much of this market moves on sentiment. So even the promise that perhaps the U.S. government, when they came in, might seize these assets, hold on to it, that's a bull case for Bitcoin if you have a stockpile such as that that isn't being liquidated.
All right, very interesting stuff. Very quickly, because we got to go. Is it a tailwind for just Bitcoin or also Ethereum, Solana, and some of these other coins?
It's a rising tide lifts all ships. In fact, XRP has had outsized performance. When you see one altcoin do particularly well, it really is one of these signs of a risk-on environment. All
right, Mackenzie Tsagalos, great to see you as always. Thank you.
I agree. So the rumor here is that because all the sanctions on Venezuela, that they were selling oil, getting USDT and moving that USDT into Bitcoin to kind of keep it off the radar. That's the rumor. I'm seeing reports, and this is not verified. Okay, I need to make sure that's clear. But seeing reports that they could be holding as much as 600,000 Bitcoin, not $600,000, 600,000 Bitcoin. That would be 3 times as much as we have in our current reserves. Seems kind of far-fetched, and I haven't seen anything on chain to support this. But that is the figure that's being thrown around. Very interesting, nonetheless. On the other end of the spectrum, though, this came out from Cynthia Lummis. Cynthia Lummis has been really critical for our efforts getting legislation passed. She did announce recently she's not rerunning, so that's kind of unfortunate. But there was a report that came out that against the orders of the strategic Bitcoin reserve that we weren't supposed to sell our seized Bitcoin. We did indeed. The U.S. did indeed sell some of its Bitcoin when they weren't supposed to. So I don't know how much, but as Cynthia Lummis says here, deeply concerned about this report. I agree. We should be accumulating Bitcoin. Other nations are accumulating, by the way, especially BRICS countries. A lot of countries are stacking right now. They're getting ready. Gold and Bitcoin. This would be a major fumble if this is indeed true. But maybe we'll be able to increase our stockpile with the Venezuela situation. We'll see. We shall see. Let me get to some comments here. Tariff rebate checks in our futures. I think so. We'll see what the ruling is on Friday as far as the rebate checks go. But as of right now, it's expected. Now, I don't think it's going to be for everyone. I think that there's going to be an income limit, household income limit, and I don't think it's going to happen until the summer. This is something that Trump hinted at before. It's, I think, a strategic play before the midterms to get voting. So certainly if all of a sudden a large percentage of the population was getting a $2,000 check, that would probably get him some votes, I would imagine. So I think we could still see that. Of course, if the Supreme Court rules against the tariffs, I would guarantee Trump is going to try to piss people off, basically saying you were about to get a $2,000 check, but the Supreme Court took that away from you. Wouldn't be surprised if we see some rhetoric like that out there. Government not following the rules. Yeah. Shocking. Absolutely shocking. All right, let's look at the Bitcoin price. And I do need to call something out here. This is the CME chart in particular. We've got a couple gaps here that haven't filled, guys. I hate to be the bearer of bad news, but yes, this is the Chicago Mercantile Exchange chart. Gap back down here right around 88. And we have another gap here around 9,500. Of course, the CME, Chicago Mercantile Exchange, does not trade 24/7. Bitcoin does. So this is a move that would either be, well, it's when the market's closed. The traditional markets are closed. So this would be from the from the close that day and the open in the next day. A lot of times it happens over the weekend because you got multiple days for price action to take place. But there are two gaps. What we have seen historically, at least, is that those gaps are closed. So that would mean we would see a retracement back down here to close those gaps. Doesn't always happen right away. Many times, though, it does. I think it's like 88% of the time it happens within a couple of weeks. So doesn't mean it's going to happen, but it's something that could certainly happen. So I just want to draw attention to that, to be aware of it. But overall, guys, I mean, what is the price right now? 93, is that accurate? 93.625? Oh, come on. Why did it move over to that? Oh, that's the total crypto market cap. Let's see what Bitcoin is. 93.116. Okay. I mean, I would have expected more of a move, frankly, with the MSCI news. We'll see what happens in the market open tomorrow. But anyway, let's take a look at some other news. This was big news. Morgan Stanley, 6.4 trillion in assets under management, filed for a Solana ETF. Oh, man. Imagine being bearish right now. Can you imagine? Obviously, the last few months haven't been fun. 2025 in general wasn't very fun. Let's be real. But look at all of the legislation, but all the ETFs, all the vehicles for capital to flow into the space are there. And as I pointed out, throughout this session, there's a lot of reasons to believe that risk appetite's coming back, and that we could see a lot of money flow from other assets into crypto this year. I mean, there's a lot of signs pointing to that. The other thing I want to point out, which is pretty remarkable, stablecoin transfer volume on Ethereum passed $8 trillion in Q4. That's actually insane. Obviously, the stablecoin, the Genius Act, has been instrumental in getting more money on chain. Ethereum has been the major beneficiary of that so far. But check that out, man. Over 8 trillion. That's in transfer volume, though, of stablecoins. Not total market cap of stablecoins, but transfer volume of stablecoins. So, but nonetheless, that is a great chart. That's a good trend to see. That is lovely. And overall, we're seeing some nice price action. Ethereum up 10% over the last 7 days. Got XRP up 22.8%. Wow. Bitcoin up 5% over the last week. Solana at 12.6%. Some pretty nice price action, not going to lie. We look at the crypto bubbles in the week. Looking pretty good. Day earlier was red for a minute, but did turn green. And then on the hour, we're seeing things kind of correct a little bit over the last hour. So no big deal, though. Green month, even. We look at some of our favorites on the watch list on the month. Not so good for HNT or Honey, huh? Let's talk a little bit about my thesis there. I talked about it in the space earlier today on that. But on the week, it's looking good. And on the day, looking pretty decent. So a lot of the project, smaller cap stuff I'm going to cover here that I'm invested in, they don't make it because on the crypto bubbles, because it has to be a top 3,000 or top 1,000 rather. Top 1,000 market cap. If it's not in there, they can't add it on the crypto bubbles, unfortunately. That's okay, though. But some green in markets. We love it. All right, let's talk a little bit about some deep end stuff, guys. This was the news of the week. This popped up over, it was on January 2nd, 4 days ago. Now, it seems like forever ago. God, talked about this so much. Look, back in August, September, Helium announced that they're going to be taking Helium Mobile revenue, 100% of it, and buying tokens in the open market and burning them. So I want to make this clear. That was in addition to the data credit buys and burns that were already taking place. So it effectively doubled the buys and burns. That was huge news. For me, I put a lot of videos out. I'm like, hey, this is, to me, this is a thesis for why the token should appreciate. And it did and immediately after that decision. And it makes sense mathematically. That's twice as much buying pressure on the open market coming in and buying the token to offset sell pressure. Okay. We saw October 10th take place after the government shutdown. That crashed markets, right? And then we saw end of year selling for tax harvesting. And ultimately, the price ended up being down, net down from when they started doing this. And I think, Amir got frustrated. I get it. He's like, look, this isn't the best use of capital. We started over that 3-month period, they spent $11 million buying tokens in the open market, H&T tokens, and burning it, only for the price to be lower. I would probably be a little pissed off too. And the big question there is, is that a good use of our capital? I mean, you could argue the price of H&T, if they didn't do that, would be lower for sure. How much, it's hard to say. But $11 million, there's probably better ways to use it, okay, is the main takeaway there. And I think that's the big statement here from Amir was like, hey, we're getting rid of that. So let me go back here. He said basically, update, the market doesn't seem to care about projects buying their tokens back off the market. So we're going to stop wasting our money under the current conditions. I think we can dissect this a little bit. Okay, so the market doesn't seem to care under current conditions, which have sucked. Obviously, there's some frustration here, I would say, in the language. It says Helium Mobile generated $3.4 million in October alone. I'd rather use that money to grow the business than pour it into a hole. Okay, so we're fully focused on growing Helium Mobile subscribers, the Helium network installed base, and growing carrier offload. Goes on and on. To those endeavors until morale improves. So he leaves the door open to go back and start doing it again. Data credits will continue to be burned for all carrier offloads as always. I think that's a part that a lot of people missed. You read this part and everyone kind of overreacted. I'm like, look, so about 50% of the open market buys and burns were the new edition. So it had doubled, but there's still a substantial amount. I would say at current run rate, probably around $10 million a year. Okay. I did reply to it. And let's see if it's, yeah. So I did post about it after he announced this. It was interesting. Like we got some good responses. We had Amir in there. We also had Kyle Samani was in the responses as well. We actually had quite a bunch of big VCs in this discussion. And I think, there's a couple of takeaways here. Let's see here. So we had that. That's another big whale here. Kyle Samani. So like some big fish here partaking in this discussion. In the days to follow, there's a lot of discussion, a lot of thoughtful analysis across the board. And I think that's one of the silver linings here is I think it is important to have this discussion. Like, what is the best use of capital? Is it to keep it for growth? Is it to buy tokens and burn it, throwing into effectively a pit, some might say? Or is it to buy tokens in the open market, put in a treasury and use those tokens later for maybe a dividend yield or for growth of the project in that manner? I don't know. I think that they're going to try different things. This was posted just today as a follow-up. He said, now that dust is settled, I've gotten a lot of feedback. He said, we're always going to buy back H&T and burn it with the revenue from carriers. So that will never stop. That's good. Goes on to say that there's people that were saying, well, if you think buying HT is a waste of money, why would I do it? The difference is that they're buying and burning. I think this is a key thing to point out. It's one thing to buy it and put upward price pressure on HNT. If you can then hold it in a treasury and the price appreciates later, you can then use those tokens for, create value for the network. By burning it, you're effectively setting your money on fire. Like, it is good for token holders for the, the buy pressure. But I do see his point here, in that it is revenue that can no longer go to growing the business. So I think there's a valid point there. And he said, I think it's important in our position to experiment. And that's the other big takeaway here. So I think that they're going to be open to other options here. And I think that's great. Now, for me, I mean, guys, when they first announced it, I was like, oh, well, I am interested in buying the HNT token. They just doubled their buys and burns, $20 million a year, and growing to open market buys. I can't say that the HNT token, I can't say I'm more bullish after this announcement. I mean, they're basically cutting their buy pressure on the token in the open market in half. So short-term price action wise, I mean, if market conditions improve, it can improve, but I look at this as a net negative in the short term. I still think it's probably good for Helium's growth and long-term viability. Because I don't see the short-term benefit in the price doesn't mean that I don't agree with the decision. So I think there's definitely an argument to be made there. But aside from mining the token, I'm not really interested in buying it right now. I'll be flat out honest on that. Like, in fact, after that announcement, it was like $1.75. I divested a decent position in HNT. I still have a bag, but I pulled it out and I put it into other projects, which I'm going to talk about here in a minute, that I think can do much better in the short term, especially on price action. So you've got to be paying attention to these things. You got to be able to adapt. And again, in this case, I still think it's a solid project. I think they're doing all the right things. This experiment changed my thesis originally to want to buy the token. Now they changed the opposite direction. I don't really want to buy the token now, in the short term at least. I still have a bag, okay? But that's just my takeaway, okay? Tyler and I talked about this on Sunday. Check it out, guys. I mean, it was a 2-hour discussion, so it's a long discussion. We talked about a lot of different things, but Tyler's he's very thoughtful and very sharp. So I would say, if you get a chance, if you want to understand what's happening with Helium more and our overall thoughts on the market, I think this was a really good discussion. We're going to start doing this the first Sunday of every month. So that's exciting stuff there. The other one is Hivemapper I want to talk about. Here they are posting on December 31st. Happy New Year. Almost 50 million all-time honey burn. Getting ready for more honey burns in 2026. Let's go. Following Helium's announcement, they started to get really transparent on their open market buys and burns. I'm wondering, now that Helium has changed suit a little bit, and they're still doing buys and burns, just not as aggressively. I wonder if Hivemapper is going to back off that a little bit. I don't know. Looking at these tokens, though, they both have similar situations. You had the big run up and then the bleed out. Okay, what do we see with Helium? The big run up, right? The big run up here in the last market cycle and the bleed out. So a little bit of a pump here in this market cycle. And I would say the big problem here with a lot of these deepened projects, even the ones that are fundamentally strong, is that, they have really good price action if you can catch them before they have a lot of dilution. If the market conditions come together at the right time, the supply is low, you can get this type of crazy price action. But we haven't seen them come back from that. And that's not to say that we can't see upside from current price at $1.59, but there's a lot of dilution that has to be offset for that to happen. So to me, it's going to be a long burn. There's going to have to be a lot of growth in revenue. There's going to have to be a lot of open market buys to exhaust those sellers from all the tokens that were pushed out early stages. So for me, like I'm very interested still in mining helium, setting up locations, to grow the network and earn. Same with HiveMapper. I've been scouting and scouring for bees that are unopened that are selling in the market right now for very cheap. That to me makes sense, but I just don't think the history hasn't shown us, at least, that we can expect to get back to those original pumps. So I think we could see these projects kind of stabilize as revenue grows. But that then brings up the point. What's the thesis? What's the goal here as far as an investment strategy? So I talked about this on a space earlier today. Have the Tuesday space pretty much every week. And that is looking at some of these older projects like your HiveMappers, like your Heliums. I am interested still in participating in the network because I think that you can still get ROI and it creates a consistent cash flow coming in. But as far as buying the actual token, that's a different story. I'm really looking at projects that fit that mold that I just covered, that we're here before the big run up, or we're here before the big run up. And what are those projects? Well, I'd say ones that hit on what I think is going to be the upcoming narratives. I think robotics is going to be massive. I don't know if you saw this video of this robot earlier. It's Boston Dynamics, freaking insane. Money's flowing into robotics like crazy in the Web2 space. So look, I think there's a parallel. We saw this with AI. I think robotics is an obvious choice for that. One project in particular is Aoki. So they're absolutely crushing it. They've got a lot of revenue. They're going to be probably, if not the most well-known robotics project in DePIN, they're going to be up there. I think as that narrative really takes off, and they've got real teeth too. Like they've got an actual product, and they've got real revenue. They've got a lot of customers, and they've got a lot of traction. So to me, like looking at this, they haven't had their big moment because the token's only been around for really a little bit over a year. I want to say it launched back in, let's look at all time, launched back here in like September, August of 2024. So to me, that hits that mold of a project that hasn't had their moment yet. They're early stage. They don't have a ton of dilution yet because their unlocks haven't really hit. And it's kind of that perfect storm of a project that could have a massive run up, right? That like we saw in the early stages of HiveMapper and Helium. So that's the type of project I'm looking for. And this is the type of project that I'm positioned into right now. Okay, that's my reasoning behind it. Silencio is another one, right? They just pivoted recently. They were doing noise pollution data. They're now doing voice collection data for training AI models. They're paying in stable coins. They've had very good feedback from their customers, and they continue to launch more campaigns. I did a space where I had their founders on, had a really good discussion. The other thing is they're introducing an open market buy and burn model soon to add further utility to the token. So you look at something like this project that's kind of flying under the radar. I think most of the market thinks that they're still doing what they've been doing all along. They don't realize that they've had this pivot. Another one that, looking at the all time, this token's only been out for not even a year yet. Okay, so another early stage project. You're catching my drift. Like early stage projects that haven't had that big run up yet, you can catch them before they have all that, the major dilution. But these also have real revenue, and they're hitting either the AI training with the data or the robotics. So this is another one, $2.26 million market cap. I mean, shit, dude. Like if this thing gets to 20 million, it's a 10x. They're talking about, hitting $30, $40 million dollars in revenue potentially with the voice data they're collecting. I was talking to their founder earlier today. They're getting like 10 to 15,000 new signups a day on their platform for people giving voice data. Yeah, sign me up, man. I've been buying this one. None of this financial advice. These are my personal plans, by the way. Like you see what's happened with the market in 2025. No one knows for sure what the hell is going to happen. But I can say, my plan has been, mine the projects that have good ROIs, like your Heliums and your HiveMappers, and Buy tokens when the market's in extreme fear. We're coming out of a period where it's the most fear we've seen, since FTX, actually like worst ever. So those are generally the times to be placing your bets. And this is another one, $2.26 million market cap, a lot of revenue, fits the bill, man. So those two, Aoki and Silencio, I've been adding to. I'm going to continue adding to. You got GeoNet in here. GeoNet's one that's been around for a while, a little bit longer. It's not super early stage project since 2022, but I would argue they haven't had their big moment. They haven't had their big explosion. But I want to explain why I'm looking at this one. Actually, it's my biggest holding in my DePIN portfolio, at least. So they haven't had the big run up yet. They've had some nice price action. It's been very organic. They didn't go to the big centralized exchanges. They've done, the DEX strategy, which actually I think more and more projects are going to do. Because if you go to a centralized exchange early on, you have to pay a ton of tokens, a large percentage of your tokens to get that listing. And it just generally creates sell pressure. We haven't seen really any benefit. In fact, we've seen quite the opposite with centralized exchange listings. So they've done the organic route. They've just hit $7 million in annual reoccurring revenue. They're projected to hit as much as 18 million in 2026 and as much as 40 million in 2027. So on one end, you have the increasing revenue. They also have a very aggressive buy and burn schedule. So 80% of revenue goes to open market buys and burns. That's probably the most aggressive out there, guys. So that's putting buy pressure on the token. On the other end, you're trying to offset emissions. They have a halving event every year. So they have another halving event coming up at the end of June. So you just do math. I mean, the math when this works, revenue's going freaking through the roof. Emissions are coming down on the other side. Something's got to give here, guys. And that is why, GeoNet is one that I'm really looking at. Now, if they had, centralized exchange listings and put a bunch of tokens out there, like right now, they're only at 43% circulating supply. Guys, if their tokenomics were structured differently and they'd gone to centralized exchanges where they had that big run up, they had like 80% of their tokens in circulation, a bunch of dilution, I wouldn't be looking at GeoNet the same. But their strategy of going the organic route with decentralized exchange listings, their team, their revenue growth, and their more thoughtful emission schedule, in my opinion, has set them up to have a massive run. And I'm super excited about where GeoNet's going. Rover, it's another one tied to GeoNet. They're collecting LiDAR data. They're selling it for training autonomous vehicles. They have real customers. $1.6 million market cap, super low cap. They are tied to GeoNet, so their tokenomics are intertwined. One thing to call out here is that they have started having pretty sizable unlocks to team and investors. Okay, so those have started. So, as opposed to some of these other ones I'm talking about, they're going to have quite a bit of dilution coming up. So that will cap the upside to an extent. But this is certainly one that at this market cap, I'm still super interested in, especially with their ties to GeoNet. So I have a bag in this one. I'm not as aggressive on this one as I am maybe an Aoki or Silencio, but I think there is still great upside on this project for sure. 375 AI is my second largest bag now, guys, behind GeoNet. So they've got everything that I'm looking for right now to position into. Their team is they're rock stars. They've proven themselves. They've been involved in DePIN, but before that, Harry was the CEO of Linksys. He's built businesses. He actually has built businesses that sold data and then sold hundreds of millions of dollars of data and exited for multiple hundreds of millions of dollars, doing something kind of in line with what they're doing here. They obviously have the data from the billboards that they're collecting, but they're also leveraging the app. And this is something I wanted to call out because there was an interview with Harry recently where he was talking about some of the brands that they're working with, some of the big name brands. And I saw this they just posted the other day, the corner store challenge. If you look at the picture, it says find shelves with one energy drink or more, take a picture and get rewarded. So I don't know. You kind of pull together the signs here. Like are they going to be partnering with different brands where you can go on and complete these challenges to take pictures of their products? That's what it seems like. That's interesting to me. When I interviewed Harry on my space, he's like, look, we're going to get to over $100 million in revenue. He said, by hook or by crook. That was his exact language there. And, for most founders, I'd be like, yeah, sure. Okay. But he's done this before. So you add that, you got the fundamental side of it, but then you look at the market cap, 6.75 million right now, below what their investors got in at. They don't have any massive dilution coming. Okay, so you've got 21% of the tokens are out there right now and circulating supply. They have almost another full year before they even start to unlock tokens to the team or to investors. And then it's on, I believe, a 3 or 4 year schedule after that. So we've got a long period for this thing to run up before any massive dilution hits. So again, early stage project just launched their token in October, right after October 10th. That's why the price is so suppressed. Rockstar team, path to revenue, and early stage again, where you don't have to worry about dilution. That is the perfect recipe for us to see something like we saw in the early stage of Helium, like we saw in the early stage of Hivemapper having a massive run. And that is why I've been positioning in this project pretty heavily. I continue to buy the dips. Shocked, honestly, that it's as low as it is. They also have a lot of centralized exchange listings. That might be why the price is suppressed, honestly. They probably had to pay for those listings. Those exchanges are probably selling. That's what we see time and time again. But that does mean when the project or when the market rebounds, that also means that there's plenty of avenues for people to get access to this token. So that works in the opposite direction as well. So keep that in mind. So to reiterate real quick, let's see, Auki, Silencio, GeoNet Rover, and 375 AI. Those are the really the main 5 right now as far as buying tokens that I am positioned into. Mining, Helium, and Hivemapper, I think make a lot of sense still today. Obviously, I'm looking for Hivemapper Dash not paying full price, but for ones that are cheaper on the secondary market. There's a lot of frustrated people out there willing to sell for cheap. You can make the numbers work there. One other project to cover here, the Ex Machina community launch is coming up in 1 day and 10 hours. Now, this is not available if you're in the US, but KYC is not required. So you can draw the conclusion there. If you have a VPN, maybe you might be able to participate. I don't know. Maybe. You have to check it out. But this is the last chance to get in on this project before their TGE. Okay, so that's a project to keep in mind. I did just interview their CEO, Mauricio. This was a freaking crazy discussion, man. It's worth watching, even if you're not going to invest in this project, to understand the whole landscape, not just the humanoid robots, but the companies that are manufacturing the parts, understanding the DePIN sector of robotics, as well as kind of that human intelligence layer for robotics. So they're getting access to all of it. Really cool project, what they're doing. So one that you should definitely check out. And again, you got about a day and a half if you do some research before that next community sale opens up. My plan, full transparency, I plan on participating in it. We don't know when TGE is going to happen yet. I don't know. I want to keep some capital to also get exposure after TGE. If they launch and the market conditions are really good, I think we can see the price go up a lot. That said, if they do TGE and the market conditions still aren't great, we could see another situation where we see a sell-off like we saw with 375 AI. In that case, I want to have some powder that I'm willing to allocate to this project that I kind of wait with to look 2 to 3 days after TGE in that case to see if we have any, more sales to lower my DCA price. But I do plan on still participating, certainly in the community launch there. Let's see what else. We have this space coming up next Tuesday. It's our episode 39. Crazy. 2026 bold predictions and hot takes. So that'll be a fun episode. The guys and I will go through our predictions for the year. we make note of all those predictions. And then at the end of the year, we'll probably do a mid-year review, but then at the end of the year, we'll come back and see where we were right, see where we went horribly wrong. 2025, we had some things we got right, but we got a lot wrong, man. I got a lot wrong. Going into the year, I was a lot more bullish than what the markets ended up showing us. It sucked, honestly. 2025 was fucking terrible. But on the other end, I'll say growing on X, growing on YouTube. I've been putting a lot more focus on X just because I've gotten a lot more traction there. YouTube's been like absolutely killing the algo for crypto. There's a lot of really big crypto YouTube channels that got completely deplatformed without really any reason. Some got demonetized without really being given a reason. So, I'm still going to put videos out on YouTube, but given the way that they've been treating their creators, I can't imagine putting that much time and effort, years and years into your channel only to be deplatformed without really even being given a reason as to why. They've tried to fight it and they just can't get any answers. Like, that sucks, man. So I don't feel like there's a threat really on X that I would have to be deplatformed at any point in time. So I've been putting more effort, frankly, there. Rumble's another one I stream to. I haven't put a lot of time into, but I don't think you have to worry about being deplatformed there really either. So I'm trying to hit different avenues, but I gotta say 2025, I think, was a really big year for growth in the DePIN space. Fundamentally, I think it made us all it's quite a humbling year too. 2024, there's a lot of money to be made that year for sure. 2025, I don't think many people made money unless you're shorting the market or you sold the top and just sat the year out, which I don't think many people did. But it certainly made me take a hard look at market psychology. My goal is always to continue getting better, in my analysis and in my investment strategy, so that I can continue to do better, but also so that I can bring more value to all you guys, man. I mean, that's the ultimate goal here. So hopefully that continues. Hope to be more right in 2026. Me too, brother. Me too. Oh, Mr. Tyler's in the house. Yeah, we're gonna again keep an eye on, man. We're gonna be doing those streams every Sunday or the first Sunday of every month. Some really thoughtful discussion there. So with that said, guys, I appreciate each and every one of y'all. Again, this is my first solo stream of the year. Very exciting stuff. I'm going to be getting back on my regular scheduling. And I think I do a Monday space with Liz and Jed and Suburban on X. I have the Tuesday Deep and Connected space. Do a DABA space normally on Wednesdays. And then looking to actually do a co-hosted space with Liz and Suburban on Thursdays. We're thinking about calling it Demystifying DePIN. So going through kind of a market overview, but also what's going on in DePIN, making it easier to understand, for people that want to get into the space. So I'm excited about that as well. I think it's going to be a great year, guys. I really do. All of our learnings from last year, positioning in the right projects, it's all about getting better every day. Make something every day. How about that? With that said, make sure to subscribe if you haven't already to my channel. Make sure to like and share. Hopefully you found value in this, and I will see you all next time. Have a fantastic night. Peace.